It's been a really crappy year for investing so far in 2022. That's no surprise to anyone. The whole bear market across indices, everything's selling off indiscriminately, even great companies like Google and Amazon. And I'm not even talking about the fintech sector, the high growth companies that got completely destroyed. But finally, we're well into the summer of 2022. The market seems to be rebounding, definitely off the 50-day moving average across all three major indices in the United States. And whether this is a bear market rally or something more meaningful for the rest of 2022, that's yet to be seen. But even in these markets, you don't want to forget about what you own. You want to rearrange your portfolio. You want to take advantage of these sell-offs for really great stories and pick up companies that you couldn't buy at these levels in the last 2 or 3 years. And so if you follow this channel carefully, you know that every quarter I like to talk about the so-called conviction list. The conviction list is a report that my former colleagues at Deutsche Bank produce every quarter. And what they do is they gather their analysts across all sectors and they ask them for the best ideas, for the best stocks to buy for the following 12 months. And so this quarter, the report contains 32 names, 32 stories. I'm going to talk about 5 of my favorite picks out of the 32, but I'm leaving all the details below the video. So if you have any questions about any of the companies I'm going to mention today, or some of those that I'm not going to talk about, but the details are again below the video, leave it in the comment section and we can talk about the rationale. All right, let's take a look. The first company I want to talk about is Amazon, and typically I like to talk about companies that are not necessarily household names, that maybe introduce you to a new company that has high potential for gains in the stock price. But here I'm making an exception to talk about Amazon as the first stock today. It's on the Deutsche Bank conviction report for a reason, and the reason really is that in the tough environment, in the bear market we have so far seen in 2022, you want to invest and focus on companies that we're kind of victim of this indiscriminate sell-off, despite being really solid businesses. This is a company that has a huge market share. Obviously, we all know that because we all use Amazon on a daily basis. They generate tons of free cash flow quarter after quarter, and they keep growing across multiple segments. They have this really large captive audience in terms of clients with repeat purchasing patterns that really give it a great advantage in these tough environments where everything is being sold off. The darlings of the COVID era, the Pelotons of this world, some of the fintech companies, the high growth companies, biotech that really got destroyed. Amazon was kind of thrown into the basket here as well, and we have seen it in the low 100s in the middle of June, right? You know that Amazon had a 20-to-1 stock split, which gives it a great level to enter here. This is not an expensive stock anymore. It was, trading the $2,000–$3,000 range. Now it's well off that, somewhere in the low 100s, $122 per share or so. But it's not just the retail business for Amazon, right? They also have the Amazon Web Services, the cloud business, which is giving them a huge potential for growth. And this market, the total addressable market for the cloud services that Amazon is a leader in, is chronically undersized. So this is, Amazon really doesn't need an introduction and kind of a detailed explanation here. We all know the stock, but I'm just mentioning it here simply to kind of highlight that you really want to focus on quality stocks. And as we go through the video today, I'm going to kind of refer to some of the charts and analysis here on the Seeking Alpha website. I've used it in the past. If you follow this channel, you kind of know that I like to use the Seeking Alpha website. They have an amazing level of analysis and charting and detail of news. The rating summary on the right side here with the Seeking Alpha authors, the Wall Street community. There's a lot of people that contribute to the Seeking Alpha website, from portfolio managers, people that allocate capital, that really do deep due diligence themselves and kind of give this to you, as a huge wealth of differing opinions on the market. So I like to use the Seeking Alpha website. They were nice enough to kind of partner with me. If you look below the video, there's a link to a free trial that gives you a 50% off if you decide to subscribe, but you can obviously cancel for free within 2 weeks. Check out the link, check out the product. The Seeking Alpha website is a fantastic source of information if you invest in the stock market. The second company on the conviction list is Delta Airlines. And I'm a pilot myself, so obviously I love following the airlines businesses, but I also look at them from the financial perspective. The analyst at Deutsche for the airline sector is Mike Linenberg. Mike Linenberg is a #1 ranked analyst on Wall Street in the airlines business. He's a real authority here and he knows what he's talking about. Delta is his #1 pick for multiple reasons. Number one, they are extremely well positioned for this rebound that is happening right now with strong summer travel demand. We see this at the airports every day. We see this on TV. They are extremely well positioned for the rebound in the business sector and long haul. Their long haul fleet has been underutilized, and this is really going to pick up over the months to come. You know that the United States recently relaxed the COVID testing requirements to come into the United States. I was in Europe a few weeks ago and finally didn't have to test coming back to the US. So that's going to be a huge source of travel demand for the next few months as well. They are finally at the 2019 revenue levels. So they make the same amount of money as they did in 2019, but they're only using 82% of their fleet to achieve that. So they're 18% more productive than they were in 2019. So that's going to be a huge tailwind as they really expand now and start utilizing and flying all the aircraft that they used to fly and all the aircraft that are coming online. Now, they also are in the middle of, they started this in 2021, a deleveraging program for their balance sheet. Now, they did the same thing or similar thing in between 2010 and 2015. So in those 5 years, they reduced their debt from $17 billion to something like $4 billion. The stock price in those 5 years multiplied by 5. It went from $10 to $50 per share. So again, as soon as the street kind of starts noticing the result of this balance sheet deleveraging program, there's going to be a huge tailwind for the stock price. And finally, when it comes to kind of hedging against inflation and the high energy cost, obviously jet fuel is number one cost for the airlines. They have a great partnership with a co-branded American Express credit card, which is a great hedge against inflation for them. And they also have a separate refinery business, so that's helping them kind of mitigate the costs of the energy prices, which again, number one cost for the airlines businesses. So look, Delta Airlines, if you're looking at the airlines businesses and kind of think, well, what airlines are really going to do well? Delta is certainly a top 3 pick. It's definitely Deutsche Bank's top pick, and I think it should be in your portfolio as well. Company number 3 on the conviction list is Zoom Info Technologies, ticker ZI, with a target of $75 per share. Right now it's trading about $40. So this is a significant upside, $35, almost a kind of 100% upside. Zoom Info Technologies is not the same company as Zoom that we all kind of became kind of a household name that we all use to dial into conference calls or call family during COVID-19. Zoom Info Technologies is a classic software as a service business. They offer a cloud-based productivity enhancing platform to about 25,000 clients internationally. Their exposure is about 13% international, likely to grow to about 30%, but they really offer a great platform that helps increase productivity across sales, across accounting, marketing, recruiting. An amazing business that, again, when we talk about this bear market and what happened to, the whole market indiscriminately, you still want to be in these amazing stories that have these high growth opportunities, and Zoom Info Technologies is one of those. They consistently deliver really well on the Rule of 40 standard at about 80% kind of a metric. So the Rule of 40 standard, if you don't know what it is, Rule of 40 is what a lot of analysts and the investing community use to value high growth tech businesses. It basically measures the growth and profitability of a business as a combination of the two. And Zoom Info Technologies has been delivering really well on the Rule of 40 standard quarter after quarter. So again, a great business that you want to have in your portfolio with an amazing upside potential in a market that is also growing, that multiplied by 3 within a year in terms of total addressable market. Again, Zoom Info Technologies, take a look at the company. Company number 4 on the conviction list is called Block, or used to be called Square. Square until the end of 2021, then it renamed itself to Block, just simply to reflect the multiple verticals they have in their business. This is a company that's now 100% run by Jack Dorsey. He used to run Square and also Twitter before Elon Musk got involved, but now he's finally 100% focused on Square. But look, Square or Block, I kind of use 2 names to call this company interchangeably, simply also because I used to use Square as a customer a lot, but also as a seller. But Block or Square is a company that really became victim of this huge indiscriminate sell-off we had across the fintech space, right? This is a company just like PayPal that really benefited during COVID-19. Their stock price skyrocketed, and finally, as we are kind of coming back to earth when it comes to valuations of tech companies, and also return to kind of normal, really got repriced here. But this is a company that used to trade in the 250s per share type of a range. Now it's at $75 or $74 per share. So this is a huge repricing. Seems to have finally found a bottom in June 2022 and started rebounding here. The Deutsche Bank analyst has a target of $155 per share. So this is more than 100% upside. And this is still a very profitable fintech business with multiple verticals, not just the Square business, the micro merchant type of seller business that we all kind of know from coffee stores, where you swipe the card on that white little square, they switch the iPad your way so you can tip them. We all know this business, but they also recently acquired Afterpay, which finalized in January 2022. That's going to offer a lot of synergies. They are integrating a lot of verticals with Credit Karma, the Cash App filing taxes. There's just a lot of businesses that Square has that generates a lot of free cash flow, and the company is profitable. So when it comes to repricing of this whole tech market and the fintech industry, I think Square, just like PayPal, will still be here, will still be growing and making a lot of money. And this whole adoption towards payments that we have seen during COVID-19 is going to stay here to a certain degree. Not as much as during COVID-19, but this is certainly a very solid business that the DB analyst values at $155 per share when it's really currently trading at half of that. So again, take a look at Square. I think this is a company that should be part of your portfolio. Finally, company number 5 on the conviction list I want to talk about is a company called SQM, which is a Chilean lithium and chemicals producer. It's actually, in fact, it's the biggest lithium producer in the world. If you look at SQM, I've been talking about all the companies that kind of got destroyed over the last several months in the bear market of 2022. If you look at the chart for SQM over the last 5 years, this is a company that really kind of keeps growing, which is really a reflection of what we have seen in the lithium market, because this is a very tight kind of a supply type of a market right now, and they're really benefiting from the increasing demand for lithium to produce batteries, but obviously the whole transition we are seeing in the car industry from the traditional combustion engine type of vehicles into the EV market, the electric vehicles, which are really powered by lithium. So SQM, as the biggest producer in the world, is really benefiting from this growth. And for them, you know, it's not just the lithium. They are a huge producer of fertilizers and agricultural chemicals as well. So they are also benefiting currently from the whole disruption in the supply chain that we are seeing out of Ukraine because of the fertilizer production that is coming out of Eastern Europe from that type of region. We are seeing SQM being a kind of a beneficiary of this disruption as well. But again, it's really mostly the lithium, the adoption of lithium for the EV industry, for the batteries, and this whole market keeps growing. The Deutsche Bank analyst has a target of $122 on SQM for the next 12 months, which in fact was a reprice already because of the growth and because of the market dynamics. And I think this is going to get repriced higher again as SQM keeps growing and the stock market keeps valuing this company as it keeps growing and becoming more and more profitable. So look at SQM. Again, there's other companies in this space, but lithium, certainly lithium and uranium, by the way. I talked about uranium in one of my previous videos. When we kind of look at how we are shifting our energy consumption and how we are shifting how we power ourselves, lithium, it definitely is a huge beneficiary here. And SQM, as the largest lithium producer in the world, is going to benefit in this space. Well, that's it for today. My 5 picks from the conviction list. Again, like I said before, all the details are below the video. If you have any questions with regards to the 5 names I mentioned today, any of the stocks that are in the report that I didn't have time to talk about today are also below the video. If you disagree with anything that I said, leave it in the comment section. We can have a debate about all the rationale behind kind of the reasons. Obviously appreciate a lively debate anytime. Thanks for hanging out today. Make sure you give a like to the video, subscribe to the channel if you haven't yet, and I'll see you soon.